Two things. I think the BOJ its schedule of rate hikes is going to be much more gradual than the Fed. I suspect you may not see much more movement until the very tail end of this year. The other thing is that for Japanese equities as itself, I do think there are a very strong case for continue to invest in Japanese equities. We've seen ongoing earnings improvement. We've got a lot of corporate actions that does tell us that Japanese companies are, again, gradually changing the way they operate to the benefits of shareholders. There is a question I think you rightly raised, which is, do we need to hedge the currency exposure in case that we do get some reversal of that dollar yen decline? I do think that in the next few weeks or next few months, yen is likely to retain its strength. So again, if you're dollar-based investors, you may want to just invest in Japanese equities with limited hedging to the currency risks.
And Ty, just staying with Japan, and let's make this the final word, do you like the M&A story here, or do you feel, and we were talking about Seven and I earlier, do you feel that they are doing all the right things? They don't really need the intervention from ACT. And when you consider the story surrounding Nippon Steel as well, that seems to be fraught with some political risk as we get closer to the election. Do you like the M&A story, and how much of a catalyst is it for a next move higher in Japanese equities?
I think more broadly, M&A and corporate actions should be favorable for Japanese companies. Ultimately, they are still very attractively valued. So from that perspective, acquisition should help to, again, boost the valuations. I think with the Nippon Steel case, I think clearly, as you rightly said, the geopolitics very much behind that. And that's, I think, something that investors have to take into account when Japanese companies are looking to acquire overseas assets.